So I'm hearing that BRICS is ultimately the biggest threat to the U.S. stock market. Then, if there is ever an adoption of a even aggregated world currency reserve like BRICS, then we need to be concerned.
That's why you have to take a look at the. In fact, that's what Taleb was talking about. Actually, thank you for reminding me of that. Um, so here, Taleb's tweet here is: people are not seeing the real de-dollarization in progress. It's not about it's not about trade settlements. Transactions are labeled in USD as an anchor currency, but central banks, particularly BRICS, have been storing. That is putting their reserves in gold. Gold is up 30% year over year. So this is the canary in the coal mine. Gold up. Gold is just soaring. What is it, up 60% over the last year and a half? Like massive amount. That is the thing to be paying attention to, because gold is that is how we can tell if people are sus on the economic system, like the monetary system. That's how we can tell. That's how people express themselves. And when I say people, I mean institutions, including central banks and sovereign entities, like big money, not the your prepper neighbor. I'm talking about real money here going into gold. That's how you can tell that something serious is happening. But on the flip side, to touch on what we were just talking about before, this is the ISM with the from cross-border capital projecting liquidity conditions in the United States. It's indicating that we're actually ticking up, or it's projected that we might actually be ticking up in liquidity, which will then change the ISM diffusion index, because, like I said, that is based on opinions of the people surveyed, and those opinions can change based on the performance of the assets that they're paying attention to. So, like I said, I'm expecting a boom between now and leading into December, just because of the effects of whenever the stock market or assets are up headed into the end of the year, there are people who are then forced to, at the start of the next year, there are people who are forced to reallocate based on the positions of the performances that they had for the previous year. So they get a blank canvas. They have more collateral now, or their collateral is worth more now, and now they're able to leverage that more in order to buy into the markets, which is why you get this, because that happens in January. You get people in November, December who anticipate that buying in January, and they buy into the markets. They cause the markets to go up even more, and then obviously those people who are forced buyers in January have to buy that much more because the collateral went up because of the Santa Claus rally. And then
Yeah.
you look in, and that's why crashes happen in February, March, because that's when that effect finishes off, and we go off the cliff.
Well, I want to highlight that there's a lot of liquidity that are looking for a new home as interest rates come down. Maybe one consideration to make here is the amount of people that have loaded up on money market accounts and savings accounts that are offering 5.5, 5.75 on high yield savings, that those rates are going to start coming down over the next quarter or two as the Fed potentially does 3 cuts by the end of the year. 3 cuts that could equal about a 75 basis point reduction overall, unless by some crazy reason they decide to cut the first one by 50 basis points, which I think is unlikely. And I think the CME FedWatch tool agrees with me on that one. That reduction in rates, though, is going to lower the yield you're experiencing from your savings accounts. People are going to start searching for higher returns within the market. And if there's this belief that we are heading into a pretty strong bull continuation, I think those funds are basically the capital we're expecting from the sidelines to help support some of this rally. And I think it's unusually high. The amount of accounts out there that are going to be looking for a new home from high yield accounts is fairly high. So
I
that's
didn't even
worth
consider
considering.
that.
Yeah.
That absolutely correct. They're gonna have to chase performance. That makes a lot of sense. I do have to mention there was a tweet. I wish I bookmarked it, where apparently there was some large bet placed that recently that the Fed would cut by 50 basis points come this month. If that's true, and if that does happen, I usually look for stuff like that, for like if there's going to be a crisis somewhere and it's brewing, and people in the know, you look for bets like that, and then you go, okay, so that's a there could be some major thing that happens that causes the Fed to have to cut. But again, I hear all that, and I hear bullish. If the stock market goes up, it's bullish. If it goes down, it's bullish. I don't know how it's any other way.
Okay, fair enough. You know, what's interesting is the prediction from the CME FedWatch tool has changed, actually. Again, this was, I didn't realize that this number had actually come down quite a bit. It was at almost 75% anticipation that it would be a 25 basis point cut. Now it's 55% to a 45% prediction of it going down by 50 basis points. So it feels like the futures market is fairly split or fairly divided on whether or not we're going to get 25 or 50 basis points.
It's
In
because
either.
of that bet, because of that large bet. That was what the tweet was about. That the tool changed, the probabilities changed because of this one large player. But it was only one large player. But I always look for one large players. One large players. That's an indication that somebody knows something because and I hate that phrase, but it's true. If you're going to be betting billions of dollars on a bet or multi-million dollars on a bet, you're not doing that just for just for shits and giggles.